Good afternoon, tackle traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, September 7th. Kind of a bland day in the market. I think a couple areas, performed poorly, but really kind of gapped down on the open and really just kind of hung around flat the rest of the day. I didn't mind it. Before we get into our charts, just take a quick look ahead to the big names coming out in earnings next week. Only two S&P 500 companies, Oracle and Kroger. I believe they are on the 13th, so they're not even until the later part of the week. So as we talked before, earnings season is behind us, but there's always, potential for some stragglers. So you always want to double check on that side of things. So a couple bigger names to keep an eye on. Taking a look at our broad markets, really not a whole lot to say. We get gapped down a little bit on the open and then just kind of hung around, took a run, settled back in, and really closed the day pretty flat, all around the broad market, all of our indexes. S&P does continue to kind of hang around on that breakout point, which, we do like to see that. No two ways about that. The NASDAQ has kind of tried to catch its footing, actually started to show a little bit this morning before kind of just giving up and calling it that day. Let's try again next week type of a deal. But since somewhere in that general ballpark of that trend line, that 50-day moving average, as long as these areas are holding, I'm certainly okay with it. And I'm glad things didn't take off today. I wanted it to be a boring day. So, if we do have pullback opportunities, we can have a whole week to work with them. That's how I wanted it. And at least for today, I got that. So NASDAQ continues to, be in that pullback phase, but we do have some support levels that are starting to hold up a little bit. Another back and forth type of a day in the Dow. It's certainly been a little different looking than our other indexes, but nothing very exciting to report from a technical point of view over in the Dow Jones. Very, very similar chart setup to where we were yesterday over in the Dow. And in the Russell, we are testing that breakout point, much like the S&P 500. We really like to see these breakout points hold. I really like when I see the buyer step in. We saw it on the Russell. We saw it on the S&P today. I really like when I see sellers getting out and at least some buyers coming in. Obviously, didn't set the world on fire from the bullish point of view, but we did kind of stop the bleeding of the last few days of selling at very respectable, reasonable, to be expected type of places, which is always nice to see. So this will kind of open the door for pull back to breakout points on individual stocks, bullish retracements on individual stocks. So as you're going through your watch list, as you're going through the scatter report, as you're going through scans this weekend, keep that in mind because that certainly can help you find some potential trading ideas going into next week. Shifting gears into our sectors, materials continues to be materials, back and forth, very neutral, very crazy on the day-to-day, but nothing really ever happens. We talked about that a lot. We're really, really sideways, and it's really hard to get a directional read on that for me at least. I know a lot of traders probably feel the same way. So we still kind of trade within that overall range. Energy actually had a little bit of an interesting morning, pretty good sell-off early, caught support on the intraday, and then really rallied up, closing right below that 200-day moving average. Once we get a little bit of a fine candle, we have a little bit of overhead. We're in kind of an ugly chart. I don't love this chart really, but if we can see some upward momentum, on Monday, coming off of support with a nice hammer candlestick breaking back above the 200, I would consider that a bullish signal. Now it's got to do that for me to consider that. So we'll see how that goes. But that's kind of what I'll be watching for. Obviously, we can also start watching for a potential breakdown. If we break support, that would be a bearish signal. So we are kind of in an interesting place, or potentially a bullish bounce, or if it's bearish break, or we can just leave it alone and find things that are a little more comfortable for us. Taking a look at the financials, really just another day at the office for them. Not a lot of really technical activity going on. Continue to hold our break. Nothing really too exciting to report over in the tech sector here today. Always nice to see the breakout point hold, though, of course. Industrials, very much like the Dow, kind of the middle of the pack type of day. Ran up, ran down, closed flat. But again, also holding that breakout point. Definitely been a stronger overall sector as of late, and definitely has held its own very nicely within the pullback of the market this week. So really unchanged. We do have a little bit of overhead around $78. Certainly breaking through that would be nice to see. Should be a little bit of upward movement available to us if we can close or break through that resistance level at about $78 that you see right here. Tech pretty much looks like the same chart as the NASDAQ, right? Somewhere between the trend line, the 50-day, as long as these hold, I'm satisfied. I'm going to be looking for some upward movement, confirmation candle for the pullback to the bell. Until that fails, then I'm going to continue to watch that. It's just not today. Today is not the day for tech. But believe me, I'll be looking through tech stocks in my scanning this weekend, just to be certain. So I'm ready for it when it happens, if it does happen. Staples, pretty flat type of day, but really kind of held their own. They did dip early, like the overall market, but really a pretty bullish candle to close the day. We did close below yesterday's high, but our overall activity today was pretty strong off of that low, really rallying strong. So that does remain a pretty solid situation from a technical point of view over in our trend on our staples. Utilities, they did not fare well today. They were not able to catch their footing. A lot of stocks, did catch their footing this morning after the open, but utilities was not one of them. Closing down pretty good on the day. We're still in the same situation, though. Our breakout point is still intact. We would like to see, of course, it to create a higher level of support, ideally, but certainly not break that breakout point. Keep an eye on that as we go forward, but really, I don't think there's a whole lot to say on utilities. It looked a lot prettier yesterday if you're a bull, but really our pattern stays the same here in our utilities. Our healthcare continues to be pretty strong. Definitely held up the best today, or certainly one of our best performers today. What do you say? We have a big, strong, bullish sector. Of course, we know that it broke that high, a couple of weeks ago, and it's kind of using that old, breakout point as support. We know it's been strong for a while, so pretty solid shape over there. I'll show you a trick that I plan to do before I just get out of here today. This weekend, if you're looking for some things in the healthcare sector, our discretionary did bounce back a little bit off of the low here today. Certainly no confirmation turnaround candle or anything like that, but we did see some buyers step in after this few days of selling. Our breakout, of course, very much remains intact over there. And real estate was our other big loser today, but nothing really, for me at least, to report technically. Like I've said the last several days and going into last week, until I'm out of this little range, I'm operating as if you just leave it alone, unless you want to trade neutral type of patterns. I'm not going to try to guess which way it wants to break from here. So right now for me, it's just a neutral. It needs to come out of this range one way or another for me to feel comfortable making a good call on it. So that's where we find ourselves in our sectors. A couple pretty rough days, but really not a lot of things that changed our technicals or anything like that. Gold continues to be gold. It will push up. It'll push down a little bit. It's really kind of holding its own, but it's just got all that overhead. It's got that history of that downward trend. And until that changes, that's what it's got, right? And so really relatively unchanged. If I'm looking at this from like we talked before, if I'm looking from a bullish point of view, this pattern, it got to get above here. And I want to see it close personally before I'd even think about that. Get back above that floor, break that resistance at the same time. That would be a bullish signal. From the bearish point of view, I can look at it a couple of ways. I can either look to go short close to resistance, where I'm going to get the best risk to reward, but maybe a little less confirmation, or I can look to come into a chart that looks like this if I break support, and that is not a very straight line, but I hope you see where I'm going with that. If I break this support level right here, then there's really nothing until we get back down towards these bottoms. So while I completely butchered those lines there, and that's all right, that's the type of things I will be looking for. So there's really a couple ways. You can either sell at resistance or sell when we're breaking support. It depends on how aggressive we are individually. And you may or may not want to do anything with gold right now, and that's fine. This is more generally speaking. Certainly, you need to decide for yourself what you want to do with gold. It's not my place to tell you what to do with that, with anything. Looking over at silver, No surprise, we continue to use that old little floor as our resistance. We've done it for 3 days in a row as our intraday resistance. We see that a lot, right? And so no terribly big surprise. Nothing has changed. We're still very, very weak. We just aren't free falling right now. So continue to monitor that little intraday resistance that we formed. Obviously, our major level of resistance is up here, but certainly now we're several days in to that intraday resistance really causing us some trouble over in silver. In our US dollar, a little bit of a bounce back day, but I'll say the same thing today as I did yesterday. I'm not interested. It's back in this range. It at least has to break back above, these highs around 95.50 before I would even think, about it. And even then, I don't think I would think that hard. I'm not loving it, but that's just me. But certainly we are at resistance. And so just because I'm not loving it doesn't mean you might not be. Let's monitor. Let's see if we're able to break that. We know, both longer term and short term over the course of this week, what a tough area that is to break through for our dollar. So we do want to make sure we're keeping an eye on that price point, no doubt. Doji today on our natural gas, starting to, see some of these short sellers maybe close out some profits for the week. It's going to take a lot more than a doji to make me want to be bullish, but it does make sense. Closing out the week, we're pretty close to a support level. Let's see how we open on Sunday. Let's see where we are at on Monday. Maybe we can make a call that we would feel comfortable with here in natural gas. But really, hanging around right around support, dojing. It's a little bit of a turnaround type of a candle. I just pretty bearish. I don't really like turnaround candles or trades like that personally after such a bearish move. But again, that is just me. And then lastly, taking a look quickly here at crude, we did dip down today, rallied back up and kind of closed back in this range. So you can look at this a couple of ways. You can look at it like me and say, yeah, I really think the next really good trade on crude is either breaking, up above here or breaking down below here. Personally, those are the things I'm mostly watching for. But that's just me. We know that this has been support. So if we see some upward movement off of that early next week, it shouldn't be terribly surprising. We've seen that play plenty of times, just like we've seen 70 play plenty of times. If that breaks, there's really not a ton until we get to that 200-day moving average. So there's some room to go to the downside. So really, if you're a bull or a bear, you can probably prep, a potential trading setup, for next week. Maybe you get it, maybe you don't. But if you're willing to bet on support, maybe we get that buy signal and you're able to do so. If it falls through, well, you won't do it. And of course, if you're bearish, if it falls through, we'll go bearish. If it pushes to the upside, we'll just leave it alone. So it is a pretty interesting location. I just am not, feeling great about the way crude is right now. So that is where we find our overall sectors and our commodities here today. Lastly, before I let you get out of here, if you're looking for anything in particular, one great way to find some potential trade setups over the weekend when you got a little bit of time is I like to go into the S&P 500, but you can sort by average volume or market cap, whatever you like to do. Once you kind of decided areas that are interesting to you, and for me, healthcare and tech are two areas that I'm very interested in going into next week. You can come in, go into the, we're in the screener here on the market skyline, of course, on tap the trading side. You can go into healthcare, you can kind of see where things are at. You could be a little more picky, but I would just want to do kind of a browse. You can either hit basic or charts. I like to do charts. Basic, you'll get a little bit more information about the company and all of that. But if you're charts, you'll just get, of course, charts, more charts. And I like to do this. These are, in areas that I'm interested in potentially next week. I can kind of quickly scroll through here and say, oh, see, they've got some resistance. I could take a closer look. If these guys were to break this resistance next week, I can't make a trade. I can't make any, certain guarantees or anything like that off of this little chart. But yeah, I can see that could be a potential breakout I would be interested in if that were the case. Pullback on sell Gs, that's something I'd be interested in. So it's just an easy way for you to kind of go in, focus on an area that you really maybe has your attention on some level, take a quick peek, see if there's anything interesting. You can go take a look at it in your charting software, see if there's a trading opportunity for you. So just a tip if you are looking for trade setups and don't don't have that in your repertoire. So with that, ladies and gentlemen, that will be our market recap for the week. As always, it is certainly my pleasure, and I do appreciate everybody's time. And if you haven't already, check out Lily, LLY. Cody just brought it up to me. Was tweeted out over on the Tactical Trading Twitter today. Nice little breakout situation going on over there in the healthcare sector. Lily's been very hot, right, Cody? They've been moving for a while from their initial breakout. Let's see, they broke out
that they have.
Yeah, good earnings and took off like crazy. Yeah, I love the healthcare sector. I've loved it for several months now. Hopefully, I'll love it for several more. So, but everybody, as always, it's a pleasure. We do appreciate your time and support here at Tactical Trading. If you haven't already, please be sure to subscribe to the YouTube channel and hit the notification bell to be alerted of any new videos that we have over on our YouTube channel. Be sure to follow us at Twitter, over on Twitter at Tactical Trading, so you can stay up to date with kind of what we're doing over there. If you did enjoy the market recap, it is always helpful and appreciated if you do give it a thumbs up to let us know we're on the right track. With that, ladies and gentlemen, get out of here. Have a wonderful weekend, and I will see you in the next one.